Bitcoin falls due to Grayscale and FTX, according to Anthony Scaramucci. The businessman and investor blames two companies for the current price of Bitcoin, but is he right? On January 10th, the long-awaited spot Bitcoin ETFs were approved in the United States. The next day they began trading on the stock market. As a result, Bitcoin soared towards $49,000, but then crashed. At the time of this recording, each unit of Bitcoin is trading for $42,890. Many are wondering what is happening and some are trying to find answers. Anthony Scaramucci, entrepreneur and investor, founder of the investment company Skybridge Capital, has his theory. First of all, he blames the sales of the Grayscale company's Bitcoin ETF, GBTC. Grayscale seems to be selling a lot, the businessman said yesterday during an interview. Indeed, during the first day of trading of the 11 Bitcoin ETFs approved in the United States, Grayscale's had been the only one that ended with a negative net balance. That is to say, money came out of this investment fund which, unlike the other 10 ETFs, was already traded previously, although it did so in secondary markets. The reason why investors withdraw their money from GBTC is because of the high maintenance fees it charges, which put it at a disadvantage compared to the competition. In any case, blaming GBTC sales for the fall in the price of Bitcoin seems a weak argument if you take into account that the money leaving that ETF has probably gone to one or some of the others available on the market. This was explained in statements to the press by Zach Pandal, General Director of Research at Grayscale. Secondly, Scaramucci blames the bankrupt cryptocurrency exchange, FTX, for the current drop in the price of Bitcoin. We are seeing that the assets of the bankruptcy of FTX are being discharged with the announcement of the ETF. There is a large volume of Bitcoin sales at the moment. I expect the oversupply to be resolved in the next 6 to 8 business days. The bankrupt exchange has more than $1 billion in various digital assets and could indeed be selling them right now. But it should be taken into account that large institutional purchase and sale operations are usually carried out in OTC markets in such a way that they do not greatly impact the price of the assets traded, which would even harm the seller. A point that Scaramucci omits and that seems to be of greater weight is the sales of Bitcoin miners. These are made on exchanges and as was recently learned, the sales volume by these ecosystem actors is exceeding the mark from 6 years ago. This type of sell-off by network miners has historically played a role in Bitcoin's bearish behavior. If capital continues to flow into Bitcoin due to elevated demand for ETFs, Bitcoin should begin a sustained rally in the coming days or weeks, thus ending the apparent sell-off event currently seen in the market.